All right, traders. Let's quickly get into what's going on in the euro here. You've seen a nice little rally at the start of Europe after Draghi started speaking, and we need to talk about this to begin with because that's the main story, right? I mean, Jesus, this is a pretty punchy move. And what exactly did Draghi say? I mean, it's been holding on, right? The euro hasn't really pulled back much at all. Holding. So it's always threatening to resume its uptrend. And basically, Draghi didn't say too much, but what he did sort of soften is his adamancy, his dovishness, right? And so, in terms of a couple of quick notes from some banks regarding what he said, UBS put out a quick note saying Draghi is implying if things go according to forecasts, they will be able to remove some accommodation. This would not tighten monetary conditions, but keep them constant. Generally, your speech sounds confident and not as dovish as previous ones. And so, in my view, the market reactions justify as clear. Draghi is quite upbeat in the message here. For the euro, it's more constructive and positive, and we could continue to see a push to 1.15, even if the Fed chance of raising rates is underpriced by the market. And so, you know, in terms of what's going on there, I mean, you know, this is sort of like the beginning of the end, and you can't stop that feeling. You know, you can't stop the feeling that the market is in ultra negative rates and is ultra easing mode, that the next move is to take away, and then the market response is to rally first, ask questions later. That's always been the case in any pair. You know, if all of a sudden we get a strong CPI number from Australia, that's not a one-day event. That's a multi-week event that just it begins to hammer on that, you know, the next move from the RBA is going to be raising rates. Same with the ECB. The next move is going to be tapering, right? It's happening. It's going to happen. And it can be delayed, but it can't be stopped. And so, you know, the rally is got fundamental and sentiment basis behind it. And it's a story which can keep on going, and you need that sort of story if you want to get a sustained rally in any pair. Now, if US yields are rising and if European yields are rising and UK yields are definitely rising, and we're starting to see Canadian yields and Kiwi yields and even Australian yields a tiny little bit starting to rise, or even though US yields are having a little pause right now, then the central bank which is left behind is the Bank of Japan, which has got this 10-year target of 1%. And so it's so easy for pairs to pick on Japan, especially if stocks are strong. So the resumption of yen rallies is seen across the board here. And if you look at the euro yen, with really strong rally. So dollar yen did go down in sympathy with US dollar weakness after the euro pop, but euro dollar yen was already testing 112 in the Asian session, and euro yen now is on a warpath, right? And it's got that move to 130 definitely potentialized right now. And that's you know, 130 is a combination of 115 on the euro, maybe 114 on the dollar yen. You get to 130 in the euro yen, and that's easy achievable, right? And same with the pound. You know, with the pound on the bit of the recovery track, a pound yen rally would really help the pound rally. And pound's got huge stops above 128. Now you have to ask yourself, where the stops bigger, above 128.10, right, or below 126? And I have to think at the moment the stops are going to be a little bit higher, greater to the top side. So who's speaking next? Well, at 8 o'clock, Carney's speaking, right? Now, Carney, he can't come across more dovish than he was, or more neutral than he was at his last speech. So the market's probably assuming that's going to be the case. He offers any sort of hope that there's going to be a November rate hike. The pound's going to go through the roof, right? Because the pound doesn't need too much reason to rally at decade lows, right? It just needs some sort of reasoning and some sort of optimism and some sort of, you know, comment that it can grab hold of. It's actually much easier for Carney to come across upbeat and you know, willing to think about raising rates than it is for him to come more neutral than his last speech, which was that sell-off. That sell-off, this sell-off. No, that sell-off, that sell-off. That sell-off. I think this sell-off. Yes, this sell. And so, you know, when he speaks in at the top of the hour, so 45 minutes, you've got to be really careful, right? I mean, especially if he says the same stuff and the market doesn't sell off much. Yeah, maybe it finds support, 127, starts to rally again. That relentless march, that the yields are increasing and the chances are higher than Carney's talking it down, and there's still people out there. I mean, he just has to say one wrong little thing and it's on. Yeah, so and one little word wrong, and then you've got this the beginning of a pack move against the yen, and that's really I'm looking forward to. Now, the way I played it last night is I'm long Aussie yen. Now, probably Aussie yen isn't going to get as exciting as some of those other pairs, Euro yen, pound yen, but it seemed pretty good yesterday without having to worry about Carney or Draghi speaking. And so first cab off the rank, Draghi's come out a little bit upbeat. Now, Carney comes off the rank a little bit upbeat. You're going to see the same reaction in the pound. And then the big speech today is going to be Yellen at 3 o'clock Sydney time, and that's really, that's a little bit more of a question mark, because Yellen's actually the hawkish one who can go a little bit more neutral or start to talk about concern with the recent inflation numbers. And if she talks that way a little bit, then the dollar will get sold. Now, dollar yen actually will respond to that, and that could throw a little bit of a hammer in, wrench into these works or this trade. But she's been relatively upbeat, and she only raised rates a couple of weeks ago, so I suspect she's going to be upbeat again. And we don't have to worry too much about her, being turning into this dove. And if she remains as hawkish as, well, she came across as hawkish last time, and we start to see yields finally react, because yields have been like, the Fed's wrong, Fed's not raising rates, market knows best. If she keeps on with the same tune, which is a very strong chance that she did with the last meeting, then dollar yen has no reason not to keep on going up, right? Because there's a war going on between the bond market right now and what the Fed's saying about how many times they're going to raise next year. And the Fed, at the end of the day, if they want to gain credibility, they have to sort of, start trying to control the market rather than let the market tell them, dictate, what's going on. And they've been doing that a little bit, right? In the last 6 months, they've been raising when everyone thought, no, they can't raise in March, and then they raised. Can't raise in June, then they raised. And so they've done a pretty good job of taking back a bit of, I don't know. For a long time, the Fed you sort of had this perception of the Fed that they'll delay forever, especially with Bernanke, and that they're really accommodative and there was no rush. Now, we have to start rethinking whether this accommodation that we've had, the pleasure of enjoying for the last 6 years is going to be there as quickly, as long as lower for longer. That whole term has potentially, going to be taken away from people being scared. Now, you can imagine if the market gets scared that the Fed's going to raise as much as they say they are, how much that's worth for the dollar yen. That's worth heaps. We're talking 120, 130, yeah, on the dollar yen. If the market starts to take them seriously, raising as much as they expect, that's without the balance sheet reductions. So the balance sheet reductions, wow, that's another way to get 300 or 400 points if she talks about that. Multi ways we can get that. Obviously, the risk is though she starts to be a little bit softer, because she's quite hawkish right now. But I'm pretty optimistic here that Euro yen, pound yen, dollar yen are all in the beginnings of a nice uptrend. And so I'm going to try and express that as soon as I get the chance in that. Now, in regards to how did I get in on the euro before the rally, I got to take, it's my mate's, technical trader, and he's got this system, and he told me there's a signal here, and I did it, right? I did it. Now, I'm not going to talk about it on stream, the system. I was of the opinion, well, there's Draghi speaking, I don't see how this can work, but technical traders don't care, they just always take the trade. And so I took the trade, and it's worked out. I tell you what, if it works out, say 8 out of 10 of the next trades, I'll be converted back. I'll open the door to becoming much more technical in my trading, right? I'll definitely stop being so anti-technical in terms of just trading, opening trades of technical signals rather than using my fundamentals and then looking for technicals as an entry point. And I'll start to definitely be, reconsider it. So I'll give it 10 signals. If it gets 7 or 8, I'll really reopen the door on technicals there and go back and have a fresh look. It's good to do that, right? I mean, if you close the book on fundamentals or sentiment trading or price action trading, then all of a sudden you see someone doing really well, it's good to reevaluate whether there's more to it and to add to your arsenal stuff which works. And I'm definitely open to the idea. Yeah, so I will be definitely watching with Ernest. First one, I think mostly luck because Draghi was so strong, but hey, got to credit where credit's due. This is working out, and I've looked at some others in the past and it's working out, so I'm very interested in it. And obviously if you make money you get interested in something, don't you, right? You just hope it can keep on repeating. So look, it's that's the reason I'm in there, so don't think that I had any sort of forewarning or I entered instantly as I saw a headline come across. That was just straight up a technicals trade from another system. I didn't put the trade system out at all. I didn't put the trade idea out at all when I took it. But Euro Yen looks really strong. Yeah, Euro Yen, Pound Yen, Dollar Yen looks really strong. So getting in on these trades and any opportunity you can, any pullback, towards 125.40, probably is going to be really good risk reward. Any sort of fresh high and then a market pullback of 50 points would be enough for me to get in as well. You think it's impossible, Potter, for me to be converted back to the text? Yeah, man, I'm not totally dogmatic about anything. Yeah, I sometimes get probably too anti-technical when it's perfect when you're beginning. You need technicals when you begin trading. 100%. Work on technicals first, then work on risk management first, and then add the fundamental price action, reacting to headline spice and a little bit of flavor to your trading afterwards. And if you end up trading medium term, then turning much more fundamental if you want to make a lot of money. So how much is a Bank of England rate hike in November worth? Let's have a little look here. The Deutsche Bank, remember, Deutsche Bank's very dovish on the pound, and they put out a little note about it. So I'm interested to see this. I haven't read this yet. And let's have a little look. Messaging has become quite mixed following the surprise 5-3 split. Carney's been very cautious. Yeah, it's true. What does a hike mean for our bearish pound view? First, sterling is highly sensitive to rate spreads and correlations between the present rise again. Pound, rand. This is an interesting point. There's a difference between a withdrawal of last year's emergency rate cut and a full hiking cycle. That is true, right? And the people who are voting for a rate hike are probably voting for the withdrawal of emergency rates rather than to start rate hiking. And that could cause all sort of mess in the interest rate futures, right? Because it could have this sharp drop-off between what they expect to happen, maybe 2 rate hikes and then that's it, done for 2 years or something. So yeah, that's very important because a sustainable rally comes from a full rate hiking cycle, not just 1 or 2. Okay. And interesting point, UK interest rates should be set against tightening policy elsewhere. Okay, so if everyone else is raising rates, then maybe the pound can't outperform. But that's not really what the question is. The question is whether the pound can get back to normal levels, right? That's 140, 150, and that's definitely possible. I think you got to be framing the question in a potential, if everyone's raising, where does a rally in the pound stop? right? Especially if Brexit goes a little less crazy than expected, then you know the rally that you get from the UK raising rates or normalising rates would be substantially bigger from these levels than, say, the euro or the Aussie will be from their current levels. You know, if Brexit never happened, then the pound would be 160 now, or 150 at least. Couple interesting little points put in there. You know, I really thought about it. If it's just an emergency cut being taken away, then perhaps the ultra bullishness is not there yet for the pound. But short term, of course, it's still worth 500 points if they raise rates, right? Right, let's see what Brett Donnelly's got for us today from HSBC. Used to be at Citibank, I think. I remember the colour scheme. I think it was Citibank. Could be wrong there. Yeah, I mean, he didn't say too much. GP Guimaraes. He just basically talked, came across as upbeat and changed a couple of words, and the market broke 112, right? You know, the market, you could tell that the market didn't need much of a reason to rally, because there's nothing there I can say, hey, well, yeah, you know, he said that. You know, he didn't really say anything really. I think Andrew put in there, removed word very from very substantial commission to substantial accommodation. Alright, what are they talking about here? On one hand, US numbers have been weak, on the other hand, Fed remains hawkish. Yeah, so that's a change, right? Can the Fed keep on being hawkish if inflation and data continues to disappoint? Last 3 NFPs have been pretty weak. I think one more weak NFP, we're going to see the pricing out completely of a rate hike this year. There's a point where the market decides the Fed's completely out to lunch, and then the market will take over and reprice. I think it's been doing a little bit of that. I think we're near that, but not at that point. If you look at the 2 years very, very closely, still very, very close to cycle highs despite the moves in 10s. So the 10-year yields have been falling, but the 2 years haven't. If 2 years start to soften, look out USD. That's true, right? Because the 2 years where you've got the Fed rate hikes for next year priced in. And, you know, the market's really not really priced in Trump getting in anything this year, that's for sure, in terms of his tax plan. He thinks that the Bank of Canada turning hawkish is too early. Nothing too crazy there. Let's see if there's an EMR for us today. EMR would be good to have a little bit more insight about Yellen and Carney. So EMR's the Jim Reed. Yeah, so the big stories out of the US in terms of politics is the Trump travel ban got reimposed a little bit, but the healthcare looks like he's losing control of the healthcare again, and so a few more senators, Republican senators, are not voting for it. That's where he's going to have the issue coming across. So 3 Republican senators announced they would not block the bill from advancing. May and Ireland's DUP had a agreement yesterday, but the pound didn't respond that aggressively. Most of the movement in the pound came this morning with the rally in sympathy with the US, so the euro. And what was interesting was the rally in US stocks yesterday. Now this is the first sort of failure I've seen in a while. So the market was really, really bullish as we were talking yesterday, right? And then schmack, could not get past. Now I don't know exactly what caused that to happen. There was a catalyst there because I was sleeping during that period, but that's not great price action. Yeah, to have that next rally, the resumption of the rally, fail below the previous high at a key level of 21,500 as in a key big figure. That's concerning. If I was a bull, I would be very worried about buying this dip. Yeah, I mean, not very worried because it's in a very strong uptrend, but I'll be put on notice, and I'll be like, whoa, that's a bit weird. I haven't seen that for a while. That's not the behavior of an ultra strong bullish market, to fail like that in resumption. A couple more lower highs and you start to get that feeling that we're going lower again, and that could really undermine a couple of the euro yen trades and the pound yen trade. But it would help euro, it would help pound, it would help US dollar selling. But let's not get ahead of ourselves, right? Really hard to call the top in the stock market. And I still suspect when you do have a correction, it'll be on the back of something, a headline, or a new piece of information. Nothing else, right? I don't think it's going to turn slowly, technically lower. You never know, though. It can. It's just it doesn't seem, like it's that sort of market. It hasn't been that sort of market for a long time. And it's not really talking about there. Not really talking about Yellen. Q&A is expected to follow Yellen though, so that could be interesting. Am I still in the AJ? Yeah, I am. Yeah, everything's looking good on that. That's got to get past a nice little level here. Once it does that, we can onwards and upwards. So there's a little bit of resistance. The previous high is still there in place. So we've got to get past that high. Dollar yen's not helping right now, but the Aussie is. So the Aussie is doing quite nicely, and the Aussie is above 76. If we break the 76 previous high, very likely we're going up to 77. Yeah, so break the 76.30-ish. We're going to 77 quite easily. Dollar yen seems to be getting support on the dip as well, as it's the selling that came through earlier today was not because of any sort of reason, based on weakness in yields or weakness in US dollar, from data or comments. It's just from the euro sell-off. And with the euro yen being so strong, I suspect that dollar yen's not going down too far, even in the face of a big euro rally. Alright, so Aussie yen is well set up. What's happened so far in the last 24 hours helps that, doesn't hurt that. Right? You told me that euro yen starting to rally sharply because of Draghi. I say that's a good thing, not a bad thing. Yeah. Yeah, what happened there, Potter? Little spiky. Let's check that quickly. So the way I check quickly was I'd go to the Twitter, because Twitter's got the sharpest reaction to headlines usually. And probably this one is not in there yet. Interesting. Alright, well that's a bad example. We won't let's check it quickly. Yeah, I don't know if it's if that is going to be the reason the market snapped 20 points. Let's just check in the bank trade room. Right, so BOE plans to raise capital buffer to 1% in November. Okay. I'll be honest with you, I'm not 100% sure how that follows through to be positive for the pound. I'm sure it will be explained to us though in time, because it's more stable. TweetDeck. I should get TweetDeck, mate. Yeah, for sure. Yeah, no, Potter's big on TweetDeck, and I should definitely get that. Yeah, I had that on my old computer. Nothing really crazy in that headline, right? I don't think that is that big. I mean, what is the counter-cyclical capital buffer as well? It's the first time literally I've ever heard of that thing. So, alright. I mean, the Carney's still the big game, right? Carney's the biggest, much more important. So let's wait for him and see what he has to say. Definitely not in any rush to buy that on that. Euro pound, if anything, is still just marching higher. Yeah, you tried to go. Now, Euro pound breaks 88.50. We got ourselves a little bit of a topside situation here, guys. 90s on the cards if we can break past here. And it does look like it's on its way. Alright, but you never know with the pound. I mean, I don't think you want to play Euro pound long as your way of trading Euro strength, unless you're very bearish on the pound, which obviously some of you are going to be. I think Euro yen's a much safer way, just because I'm not sure how the pound's going to respond if in the next couple of weeks. I don't really want to go to be buying at really high levels and getting stuck into the trades. But obviously it still looks nice right now. If it can break that 88.50, there'll be some follow through. So let's see. It's going to be interesting. 25 minutes. I'll be in the chat room. I'll give my thoughts on what Carney says. If he comes across as a little bit more open to the possibility of raising rates this year, then the market will respond. If he keeps on saying the same stuff again, then the pound's probably going to go down just a little bit. But I don't think it's going to get carried away. Definitely not as aggressive as it did last time. All right. And if the euro still wants to rally in that scenario, then the pound's probably going to come back up quite quickly. Alright, guys. Good luck. I'll be back tomorrow. Tomorrow's got another whole swathe of ECB speakers. We might be able to get a special little second stream going tomorrow night when those speakers begin. We might watch the panel and see if there's anything market moving said. So we could have a double stream going on tomorrow. So that'll be at 11:30 Sydney time. So that's 4 hours from now in tomorrow's world. And so it's that's where there's another big little panel going on with some big name speakers, Kuroda and Draghi, Bank of Canada, Polos, to name a few.